What is up, everybody? I hope you guys are all having a good day today. We are seeing more bloodshed across the market. Bitcoin breaks down below 36.5. I kind of talked about what my opinion was if we broke below 36.5 with a confirmation candle on the weekly. I think if that happens, at the weekly close, we probably are headed to 31. Obviously not financial advice. This is just my opinion. Stating, my opinion based on what I've looked at historically, looking at a lot of different other people that are doing TA. It's just this is just kind of my opinion. So it is what it is. We'll see if we have more bloodshed. I did talk about the 21 EMA and the 50 EMA and kind of what I would think that the market bottom would potentially be at if we do capitulate, which I'm leaning towards, heavily looking at everything that I'm looking at. In my opinion, I think we're heavily probably leaning towards that potential capitulation moment over the next handful of months here. But there's still a ton of opportunities in this space. We're going to go over some of those today. Not financial advice, obviously, but also not for entertainment purposes only. And Darren and I talked yesterday during the podcast, essentially, that when you see certain organizations announce something, it's almost like there's a bang, bang, bang type event where today we're going to go over that. Bank for International Settlements, European Central Bank, and then Dtcc as well, all putting out very, very interesting information. But then getting into the opportunities aspect, for transparency's sake, I obviously am an affiliate with iTrust Capital, but I'm an affiliate because I believe in iTrust Capital. I believe in empowering people, through their retirement accounts. We see that, it's not even, iTrust Capital was an early mover within this. And this is kind of going to be the norm for all of these larger organizations moving forward. Looking at Fidelity's announcement probably 3 or 4 or 5 days ago, where they were saying that essentially they're looking into adding 401k opportunities within crypto for their clients, about up to 20% allocation within 401ks within Fidelity's clients for cryptocurrencies, and Bitcoin was the example used. But yeah, I'm looking into iTrust still, and put my money where my mouth is. I loaded up my iTrust account with 6K. It actually just went through recently. I think that's the max contribution on a yearly basis from an individual standpoint. And their model is obviously, it's been sustainable. They just did a Series A that brought the company valuation to an excess of $1.3 billion and 60% transaction volume growth over the past 9 months. Not 9 months. Now, to be, again, transparent with you guys, I loaded up my account from an IRA standpoint. I'm keeping it in USD right now, and I plan to make moves into some of these assets if we do have a capitulation moment. I'm just kind of running down the line here. Algorand is interesting to me. Avalanche is interesting. They have a lot of really good assets on here. I think they just added the graph. Cosmos, Polkadot, Polygon's on here, Solana's on here, Stellar's on here, Tezos is on here. You kind of get the picture. Also, physical gold and physical silver. I don't plan to mess around with physical gold and physical silver on iTrust personally. I do really believe in physical gold and physical silver, and more so even into physical silver, but I like to hold that. So, but yeah, there's going to be tons of opportunities. If we do capitulate, this is going to be one of the moves that I make during that capitulation stance is, going into a few of these assets on iTrust with the fiat that I've loaded in. Okay, so here's what I was talking about, though. You kind of see similar narratives presented across the board. This came out, I believe, today or yesterday. Bank for International Settlement paper. Gaining momentum. Results of the 2021 Bank for International Settlements survey on central bank digital currencies. Very, very interesting document here. You can kind of look at the growth and engagement with central bank digital currency work across the board here, 2017 to 2021. In 2017, we were probably sitting around 64% of central banks actively engaged in CBDC work. And, 2021, by the end of the year, based on these survey results, was 90%. Not surprising, right? The focus of the work, retail and wholesale, type of work in addition to the research, experimenting and proof of concept. So 2021, over 60% of these banking organizations had said that they were dealing in experiments or POCs within CBDC aspects. I guarantee you, we see this number over the next year, 2 years at max, go up to 80, 90%. Development and or pilot arrangement, you're going to see this number skyrocket as well. Right now, it's only at about 25%, I would say. But it's just interesting. Role for the private sector, handling of retail payments, et cetera, et cetera. And they're very interested in onboarding of clients in KYC too. Another interesting thing that came out was this interview with Frank Alderson, who is a member of the executive board of the ECB. Not a ton to get into with this, but they are asked about the digital euro, and it's certainly talked about. Like I said, you kind of see just a handful of these announcements coming across. Now, the most interesting one to me, and this is kind of the whole reason that I think that this video makes sense to do, is you look at an organization like Dtcc. Now, if you're not aware, Dtcc deals in derivatives, essentially settling or transacting in volumes, that exceed multiple quadrillion, and that's right, quadrillions of dollars on an annual basis. You can look at 2020, for example, 2.3 quadrillion in securities transactions, which was up over 8% from the previous year. Now, this is confirmation that we are 100% in the right place. And I'm just going to read a couple of the phrasings from in this. If you type crypto in, there's 51 targets or target hits within this Dtcc paper that was literally just published. This paper is called Interconnectedness, and this is revisited, Interconnectedness Revisited. So it's a white paper, essentially, for the industry. I'll read this, though. Cryptocurrencies and other distributed ledger technology applications are becoming more interconnected with the global financial system. New challenges to financial stability are starting to emerge as these and other fast-growing fintech-related developments are becoming an integral part of the financial ecosystem. And there's a good amount of information in this. Hold on, let me say there was one more interesting one that I want to share with you guys. Like I said, there's tons of hits within this. A massive collapse. Now, this is a quote from the Deputy Governor for Financial Stability at the Bank of England. This was given October 13th, 2021. Dtcc is pulling this quote. And I want you to think about what this quote means, okay? A massive collapse in crypto asset prices, similar to what we have seen in tech stocks and subprime mortgages, is certainly a plausible scenario. In such a price correction scenario, the first question that arises is the degree of interconnectedness between cryptocurrencies and the conventional financial sector. While financial stability risks from the application of crypto technologies are currently limited, so there's not a whole lot of risk right now as far as where connectivity exists within the crypto markets and the current markets, there are a number of very good reasons to think that, all else being equal, this might not be the case for very much longer. What John Cunliffe is saying, the Deputy Governor for Financial Stability at the Bank of England, is that digital assets and cryptocurrencies are 1,000% going to be integrated into the traditional financial system. The one thing that I would disagree with within kind of the rhetoric behind this is, he's essentially tying this into like subprime mortgages and tech stocks, like the tech bubble, et cetera, et cetera. Now, we have many ones like this all the time, but you're going to have assets of utility that are regulated out, and they're going to have, even from the Darren and I podcast again, BlackRock basically saying that utility hasn't been priced in. Assets and cryptocurrencies that have been dealing in utility are going to be dealing in utility. They're going to maintain stability because the price is going to be higher because utility hasn't been priced in, and it's not going to fluctuate as much. It won't be as volatile whenever the market cap of crypto isn't 2.6 trillion at the top, but is closer to 226 or let's say 200 trillion. I'm not saying 200 trillion, but it's just an example, right? As kind of as the market ecosystem matures, as these assets, gain in value based on utility, et cetera, the volatility goes down, right? Because they're not, the liquidity's higher. I mean, there's a number of different reasons why, but Dtcc stating literally that, we're not too far away from interconnectivity within the crypto markets and crypto assets. And they give a ton of examples within this. A number of developments suggest that cryptocurrencies are becoming increasingly interconnected with the more traditional financial system. Several financial institutions have started offering their customers access to crypto exchanges through their applications and are developing exchange platforms themselves. So, financial institutions developing exchanges. Some payment firms are analyzing how they can use stablecoins for payment and settlement purposes. On April 14th, 2021, cryptocurrency exchange platform Coinbase went public. The first Bitcoin linked exchange traded fund, ProShares Bitcoin Strategy ETF, was launched in October 2021. As direct exposure levels to cryptos continue to grow, so does the possibility that a sudden price drop might have a systemic impact, especially given the probability of contagion between cryptocurrencies themselves. Now, the contagion between cryptocurrencies themselves is innate within kind of the trading that goes on as far as market liquidations when people are leveraging, they're longing and they're shorting on leverage and they get liquidated and their whole portfolios get liquidated, et cetera, et cetera. Just one of the things. But yeah, as we see more and more adoption, I think crypto to crypto, you're not going to have as much of a correlation once we have regulatory clarity and once all this whole kind of internet of value shakes out. You're going to have some, certainly, but you're not going to have what happens right now where Bitcoin shits the bed and everything shits the bed worse than Bitcoin shit the bed. But, really interesting. They're talking about crypto hedge funds. A recent report identified 150 to 200 specialist crypto hedge funds. Banks' activities in this area have largely been focused on providing agency services such as custody and trading, but some banks are planning to offer broker-dealer services and may thus become directly exposed to cryptos. I mean, we all know where this goes, right? And it's just interesting to me from Dtcc, from the European Central Bank, Bank of England, that we have seen such a rhetoric shift over the past handful of years since I've been here, and it's moving extremely, extremely fast, the amount of adoption that's occurring. And an organization that basically deals in all the derivatives and securities settling like across the board as far as in the quadrillions of dollars telling you that that's happening. I mean, I think that people should wake up and pay attention that are outside of the crypto space because it's happening. And moving forward, even within this, France becomes the first big European nation to grant crypto giant Binance regulatory approval. South Korean president seeks to delay crypto taxation until 2025. We've talked about 2025 multitudes of times. That is the swift end date, the deadline for ISO 20022 migration. A lot of these proof of concept initiatives through these central banks shake out in 2024. I can think of the European Central Bank as one. I can think for Bank of England as another, and there's certainly more that I'm not even mentioning. So delaying crypto taxation until 2025, that's not an arbitrary date, okay? That date is a date that we've talked about multitudes of times across the board on all these channels. Real quick, I'm going to hopefully get through the rest of this quickly. I hope you guys found a little bit of value within that, but first African emissions reduction credit platform has been unveiled. It's going to be known as CYNK and going to use the Hedera Hashgraph public decentralized ledger to track emissions reductions. Now this is Tamua. This is Kenya's biomass company, and they're starting Africa's first verifiable emissions reduction platform in a bid to benefit its own project and those of other companies in the region that cut the production of climate warming gases. I saw another article maybe 2 weeks ago surrounding Earth Day and talking about, eco-friendly distributed ledgers and blockchain initiatives. I know Hedera is not a blockchain, but distributed ledger initiatives. Hedera certainly was mentioned in that article too. I can think of things like Energy Web. I can think of the tie-in within the within XRP and Energy Web. Essentially, that carbon negative aspect or carbon neutral aspect by 2030. All right, I'm going to go through this because I talked about on XRP probably multiple times on this channel. Again, I'm not affiliated. I just believe in the platform very much so. And this announcement today, I think, is the biggest announcement that I've seen from on XRP across the board. The marketplace for XLS20 is gigantic. The NFT minting is gigantic on the platform. That's what's been alluded to. Gamification is great. Metaverse is great. All these things that may or may not be coming. They also announced, I think, that they're going to be doing physical NFTs, one-of-a-kind NFTs out of the Michael Jackson collection, own physical photos, plaques, awards, etc., etc. That's all fine and well, and that's great. But this is gigantic. Within a network like the XRPL, where essentially you've got some as kind of the main wallet that we all use, right? And you look at a network like Ethereum, and not even Ethereum, but EVM-based assets that are all tied into MetaMask, right? MetaMask is kind of that wallet of Web3, at least so far, correct? We are excited to announce that Allbridge and OnXRP joined forces to bridge Ethereum assets like USDT to the XRP ledger. This also means that we are working on a MetaMask integration as the first XRPL decentralized exchange. And you can read more about the partnership from this announcement. 272 likes. I mean, That's absolutely massive. If on XRP, and it was reciprocated in the price, I don't know what the price is at right now, 14.145 XRP per OXP, up 21%. That's a massive weekly candle, potentially just minus the wicks here, but consuming all of the other candles that have previously existed within the weeks. And like I said, I made a buy at XRP. I posted this to Patreon. I made a buy at XRP, I think at 0.06 XRP per OXP, which was like a $2 million market cap. Literally like a $2 million market cap. This isn't financial advice, but if on XRP, as a DEX, and as a marketplace, etc., if they garner MetaMask integration, yeah, it's going to be pretty big. You can kind of do your own math about what that potentially might look like. So, last but not least, I wanted to talk about this. Some of the moves that Ripple was making, especially given the lawsuit right now. And I saw this last week, but Ripple Labs reportedly taking the entire 130,000 square foot building at 600 Battery Street in the Jackson Square neighborhood in San Francisco, doubling down in the United States. Ripple certainly building out across a lot of different nations, setting up offices and headquarters in a lot of different nations, but certainly doubling down in the U.S. as far as this massive building that essentially they're going to be moving into, which I think is just awesome. And then if you didn't see it, this is in case you missed it. The website had an upgrade last week. I can't remember if it was Wrath of Kahneman. One of the guys in the XRP community put a really good thread out. There's Ripple puts a thread out today. There's a Ripple events page, which is new. There's a crypto liquidity page, which is new. Exploring the Ripple liquidity hub, which is very interesting, and joining the waitlist for that. Developer resources, central bank digital currency page, cross-border payments page, and I think was the cross-border payments page. Yeah, how Ripple's cross-border payments solution works. Previously, I think XRP and RippleNet were on separate pages within Ripple's website, and now you have the cross-border payments page pretty much flowing through XRP, right? So that'll be very interesting to watch how all of this plays out. I hope you guys enjoyed this video. I hope you guys enjoy your weekend. Just remember, even though there's bloodshed, there are also opportunities in this space. I've told you what I'm watching. Again, my opinions could be wrong, but these are my opinions, and it's not financial advice. But it is what it is. I'm gonna be straightforward with you guys and tell you guys what I'm looking at on a consistent basis, and I'm not gonna be right all of the time, but hopefully there's some value within the information that gets put out. I will talk to you when I talk to you. Thanks.